If you're watching this, you've probably already fallen in love with Spain. The lifestyle, the weather, the home you found. But then you realize something. You're an American. What does that mean? Taxes? They're getting complicated. Real complicated. Because unlike, say, British citizens who just deal with Spain, Americans have to file taxes in 2 countries at the same time, simultaneously. And get that wrong, the penalties are brutal. I'm Brian Stevendale, and this is Taxes Made Simple, part of my Spain Made Simple series. And my job is to make sure you don't pay the taxes that kill your Spanish dream. Look, Spanish taxes aren't actually complicated. It's the American part that throws people off. You have to file with Spain, you have to file with America. And if you don't coordinate these correctly, you'll pay taxes twice on the same income, which is not a scenario you want to be in. So here's what shocks Americans most. First, the 183-day rule. If you spend more than 183 days here in Spain during a calendar year, Spain considers you a tax resident. That means you pay Spanish tax on your global income. All of it, not just Spanish income, worldwide. Now, you're also a US citizen, which means you also have to file with America on your worldwide income at the same time. So what's that? Double filing. But it's not double taxation. If we do it right, but definitely double filing. So here's the part nobody tells you. The deadlines are different. Spain's deadline, June 30. America's deadline, June 15. And they both want your money first. But here's the good news, and I mean really good news. The US and Spain have a tax treaty, and it was updated back in 2019, and it's actually brilliant. This treaty prevents something called double taxation. That means you don't pay taxes on the same income to both countries. Here's how it works. Let's do option 1, the foreign earned exclusion. You can exclude up to $130,000 of earned income from US taxes. That means if you're working in Spain and making $100,000, you don't pay US federal income tax on that money. You only pay Spanish taxes. Great. What about option 2 then? The foreign tax credit. You pay Spanish tax, say £20,000, you can credit that directly against your US taxes, giving you a dollar for dollar relief. Which one's better? Depends on your situation. But either way, you're not paying taxes twice. That's the important point. Now, here's something most Americans don't know. Spain also has this Beckham regime. It's actually called the empatry tax regime, and everyone calls it Beckham because of a soccer player who used it a few years ago. It's kind of famous. This regime is a game changer. If you're moving to Spain for work, and this is important, you can elect to pay a flat 24% tax rate on Spanish-sourced income for 6 years. And here's the kicker, you pay no Spanish tax on all foreign-sourced income. So if you have real and rental income, pension, dividends, none of that's taxed in Spain at all. So it's particularly powerful for Americans because it simplifies your Spanish tax situation dramatically. Now let's talk about the property part, because that's where Americans can trip up. First, there's obvious property tax. In Spain, it's a nominal amount. It's called IBI, and it goes between 0.4 to 1.1% of the cadastral property value. That's the book value of your home, always less than market. And it's very reasonable compared to the United States. Where the catches people is the capital gains tax. Say you buy a property for $300,000. Sell it for $450,000. That makes sense. Make a good profit, $150,000. But there's a CGT in there. And if you're a non-resident, Spain withholds 3% at the point of sale. But the real tax bill comes later. And those rates can vary depending on your situation, 19 to 24%. And if you're a Spanish tax resident, it's getting a little bit more complex because you pay tax at savings income rates, which can be quite high depending on the size of your gain. So when you sell for a profit, expect 20 to 30% of that gain to go in taxes to Spain. But remember, you're also an American. So you'll file this again with IRS, right? But because of the treaty, you get credit for Spanish tax we talked about before. So you're not paying it twice. Let me walk you through some filing requirements because this is really important. Spain and America-like forms. Modelo 100 in Spain by June 30th. That's your annual tax income statement. Straightforward. In America, 1040 by June 15th. Because you're overseas, you automatically get a 2-month extension to August 15, but let's be honest, you want to file that early and get out of the way. And here's the other forms you need to think about. American has a thin send. The Form 114, that's the FBAR, you know this one. That's about reporting foreign bank accounts of over 10,000. And you got penalties if you miss that. Brutal ones, taking up to $10,000. And then you Form 8938, foreign financial assets. If you do own Spanish real estate, you've got to report that too. Spain, if your assets are outside, we're talking bank accounts, investments, property. They're filing on a form they call Modelo 720 by March 31. And again, there's penalties. Not as high as American, but they're there. It's not a situation you want to guess and be late about. The penalties can be severe both sides. So here's what keeps Americans up at night. It's not Spanish taxes, because they're actually quite competitive. It's the complexity. You have got to file in both countries. You've got to understand the tax treaties, and you've got to know the difference between earned income and investment income. You've got to have the residency done right. Take advantage of the Beckham regime. One mistake, one missed deadline, one form filled incorrectly. Wow, penalties, interest, and potentially an audit. No one wants that, and that's your real cost. So where do you start? Don't guess. Don't handle this yourself. We've built a tax residency planner tool. It's free. It takes about 3 minutes, and it walks you through whether you'll be a tax resident in Spain, what your dual filing obligations are, and whether you qualify for the Beckham regime. Your timeline, and more on documents and other needs before you come here. Because if you plan this right, coordinate your arrival, your visa type, your income structure, and your tax residency correctly, you'll save tens of thousands of dollars. Plan it wrong, it's the opposite. The difference is one tool, one conversation. So my recommendation, take the tax residency planner on the website. It's free, no pressure, just use it. It's information only. And if you're ready to move forward, you can book a consultation with a US tax expert, both there and here in Spain, who've helped hundreds of Americans navigate this system. They know the treaties inside out, they know what structures work, and they know what the IRS look for, and they also know what Spain's looking for. Moving to Spain should be about the life you're building, the adventures, the freedom, the family time. Not about staying up at night worrying if you filed the right forms in the right countries by the right deadlines. Let us handle the taxes, because trust me, an American getting Spanish taxes wrong, expensive. But getting them right, that's where the real dream begins. Check the link below for your free tax residency planner. And welcome to Spain Made Simple with Sandtons. Let's make this happen.